Today's session is one of the first real tests of something that's been hanging over Tesla for weeks. Tonight, SpaceX is expected to set the price for its stock market listing, with shares scheduled to start trading Friday. And for Tesla owners, the story isn't really SpaceX. It's the worry that some Tesla shareholders are about to sell their Tesla to fund their piece of it. We've also got Belgium becoming the fifth European country to wade through Tesla's self-driving software. Tesla's first folding Superchargers landing in Europe. A UK sales result that cuts against the share loss story, and more. This is the Tesla Brief, pre-market on June 11th. Welcome to the show. A quick check on where the stock stands. Tesla closed its last session at $378.80. And we don't have a settled pre-market figure this morning, so that's the level to anchor to. In the recent sell-off, the Nasdaq fell 2%, and the S&P 500 dropped 1.6% on a hot inflation reading. Tesla went down right alongside the other big growth companies. That tells you the recent weakness has been about sector-wide flow, not anything specific to Tesla. So let's start with that SpaceX listing, because it's dominating the Tesla conversation right now. And it's worth slowing down to understand exactly what's being argued. Here's the setup. SpaceX is expected to set its listing price tonight, after the close, with shares scheduled to begin trading Friday on the Nasdaq. They're expected to trade under the ticker SPCX at $135 a share. That works out to a valuation of roughly $1.75 trillion. Bloomberg reports the deal is roughly 4 times oversubscribed. Far more money wants in than there are shares to go around. A Bloomberg intelligence analyst called that, in his words, the low side of what we might have wanted to see, given all the public excitement. Gulf sovereign wealth funds are reportedly bidding $1 to $5 billion each, and demand from everyday retail investors is running heavier than from the big institutions. And that retail-heavy demand is exactly where the Tesla angle comes in. Gary Black, who runs the Future Fund, put the worry plainly. He wrote, quote, "I believe many retail investors buying SPCX this week will lighten up on their TSLA positions to fund their SPCX shares." End quote. In other words, there's only so much cash in a retail investor's account. If they want a piece of SpaceX, some of them sell Tesla to pay for it. That's the soft worry that's been sitting in the background for weeks, and now it has a name and a timeline. Black isn't bullish on the listing itself, either. He thinks the underwriters will engineer a strong first-day pop, but he sees the stock is priced extraordinarily richly. By his math, hundreds of times its earnings. His advice is to wait for it to come back to earth before buying. And he's not the only well-known Tesla voice flagging the rotation risk. The worry that retail money is quietly draining out of Tesla and into SpaceX has been echoed across the investor community over the past few days. Here's what's worth noticing about all of that. The discussion has converged almost completely on one reading, that the SpaceX listing is a near-term drag on Tesla. Almost nobody is making the opposite case, that it could actually be good for Tesla in the short term. And when everyone lines up behind the same single mechanism, retail money rotating out, that's often a sign the thing may already be priced in. If everyone expects Tesla to dip on Friday, a lot of that selling may happen before Friday even arrives. There's also a policy wrinkle. According to reporting, Senator Elizabeth Warren has sent a letter to the SEC asking the regulator to delay the listing. She points to Elon Musk's voting control and to mechanics that would eventually force index funds to buy SpaceX shares whether they want to or not. Realistically, the SEC is very unlikely to step in this late in the process. But it's part of the noise around the deal. And the listing has kicked off a second, longer-running conversation, whether Tesla and SpaceX eventually combine. On the Risk Reversal podcast this week, Wedbush's Dan Ives appeared fresh from Apple's developer conference, and a co-host raised the odds of a Tesla-SpaceX merger down the road. The same idea surfaced from a different corner the same day. Keith Fitzgerald said he sees, in his words, a very high probability that Musk combines Tesla and SpaceX functionally or literally within the next couple of years, pointing to shared work across energy, robotics, data, and AI. Neither of them put hard odds on it, and nothing has been announced. This is pure speculation. But two named voices raising the same idea on the same day is worth flagging. Here's why it would matter if it ever happened. Any combination would mean today's Tesla shareholders end up owning a piece of a much bigger company. And the terms of that swap, how much of the combined business each Tesla share would turn into, is what would decide whether it's a good deal for them or not. That's the whole question, and it's a long way off. So what actually resolves here, and when? The clean test comes Friday and into Monday. If SpaceX gets its strong first-day pop and Tesla doesn't sell off with it, then the rotation worry was overstated. But if Tesla underperforms the NASDAQ on Friday and into early next week, then the people warning about retail money draining out were right. Either way, the tape over the next few sessions answers a question the commentary can't. Away from the SpaceX noise, there was real product news. Belgium has become the 5th European country to approve Tesla's full self-driving supervised system. The country's mobility minister signed off on it Tuesday, and it now moves to a final administrative step. What makes this interesting isn't Belgium on its own, it's the pace. 2 months ago, the open question was whether Tesla could get a single European regulator to move. Since then, the Netherlands, Lithuania, Estonia, Denmark, and now Belgium have all said yes. And the last two came within a day of each other. That clustering matters, because it suggests Europe's regulators have found a template they're comfortable signing off on. And once that happens, approvals tend to come faster. But there's a real caveat. Every one of these is a smaller market. The piece that's still missing is a big one. Germany, France, the UK, Spain, or Italy. Until one of those falls, FSD's European footprint covers a lot of countries, but a much smaller slice of the actual cars and revenue. So the test from here is whether the cluster keeps growing, or whether the easy approvals were the small markets and the hard ones still hold out. Tesla also rolled out its first folding superchargers in Europe. Photos suggest Norway, which is almost always where Tesla debuts new charging hardware. The folding design is the interesting part. It's a pre-assembled charging station that arrives on a truck and unfolds on site. Tesla says it fits 33% more stalls per truckload, cuts installation time roughly in half, and brings deployment costs down by more than 20% versus building a traditional site. Here's why that's a bigger deal than it sounds. The supercharger network is one of Tesla's hardest assets for anyone to copy. And the thing slowing its expansion was never the hardware itself. It was the cost and the time of building each site from scratch. Make that faster and cheaper, and suddenly Tesla can justify putting chargers in places that didn't quite pay off before. There's a competitive backdrop too. China's BYD is rolling out thousands of its own ultra-fast chargers across Europe. So the modular, fold-out approach is Tesla's answer to BYD's raw speed, and the broader European rollout is targeted for the third quarter. There's also movement on the chip front. The roughly $119 billion semiconductor project Musk announced near Bastrop, Texas, called Terafab, has filed for school district tax breaks after already winning a county-level exemption. That sounds procedural, and it is, but it's the kind of procedural step that turns an announcement into an actual factory. Tax breaks at this scale are how big chip plants get financed in Texas. Why Tesla shareholders should care. Terafab is meant to produce the AI5 and AI6 chips that run Tesla's self-driving stack and Optimus. Musk has said the AI6 chip might set a record. The faster Terafab moves through permits and tax deals, the more credible Tesla's claim becomes that it controls its own AI computing supply, instead of waiting in line behind everyone else for NVIDIA chips or factory capacity. There's no dollar figure on the tax break yet, and these processes can take months. The things to watch are when the school board actually votes and when ground gets broken. Quickly on sales. In the UK, plug-in electric cars took 35.2% of the new car market in the first quarter, up from 30% a year earlier, and Tesla was the best-selling battery electric brand. That cuts against the steady narrative that Tesla is losing ground in Europe to BYD and the German makers. In one of Europe's larger markets, Tesla still leads the pure electric category. What this number doesn't tell us is whether that lead is coming from price cuts or genuine product strength. And the continent-wide May figures, due shortly, will give a cleaner read. A few quicker things to round out. On the Robotaxi front, nothing material moved overnight. No firm Phoenix start date. Where things stand, around 60 Model Y vehicles are staged in Phoenix, doing the mapping work that has to happen before any commercial launch, and Tesla has quietly loosened the timeline on its planned 5-city expansion. The honest read is that Robotaxi is progressing on the engineering side, but slipping on the calendar side, and the year-end target of 12 cities looks harder to hit each week it goes unaddressed. On Optimus, it was also quiet. The version 3 reveal has reportedly slipped from spring to late this year, and Tesla hasn't said anything to confirm or move that window. One adjacent data point, NVIDIA and Amazon just led a $1.4 billion fundraise into Neura Robotics, a German humanoid robot company. It doesn't change Tesla's position, but it does tell you the money-chasing humanoid robots is finding other homes while Tesla's program stays quiet. And on the broader market, the Wall Street Journal reports stock futures pointing higher this morning, after a rough stretch driven by that hot inflation reading and a wobble in AI companies. Oracle beat expectations but fell after announcing it would raise another $20 billion for data centers, which put the gap between AI spending and AI revenue back in front of investors. Two things move markets today: SpaceX pricing after the close and a European Central Bank rate decision midday. Here's what this means for Tesla. Tesla's value leans heavily on profits that are years out: Robotaxi, Optimus, self-driving. So when inflation runs hot and rates look like staying higher for longer, those far-off profits get marked down harder, and Tesla tends to fall more than the market does. That's why the recent moves have been about sector-wide flow, not anything Tesla-specific. The first real Tesla-specific catalyst is May delivery data out of China, expected around the start of next week. So here's what to watch. The near-term question is simple to state and will answer itself fast. Does the SpaceX listing actually pull money out of Tesla, or was that fear already baked in by the time it trades? Friday and Monday's tape settles it. Beyond that, keep an eye on whether Europe's FSD approvals keep clustering or stall at the big markets, whether a firm Phoenix Robotaxi date finally lands, and that China delivery number early next week. The first thing on the calendar that's about Tesla itself, rather than the mood of the market. That's the Tesla brief for today. If it's been useful, please subscribe. Thanks for joining us, and we'll see you in the next episode.